Hi, this is Young and Broke, off the Young and Broke channel. I wanted to bring to you a little something. This is the pilot podcast for my Young and Broke channel. I wanted to talk a little bit about what happened March of 2022 this year that a lot of people are not talking about or covering. And that would be the executive order that was passed. Now, I'm going to outline a little bit about this executive order. Technically, it allows for the government to oversee and look at the money inside of your bank account. And a lot of people, honestly, that I had spoken with didn't care. They're like, well, I don't care if someone sees, if the government sees my money in my bank account. Why does that matter? Well, here's the issues that I have with that. If you look at what took place with Russia, a lot of the different payments necessarily were, suspended, where, they weren't allowed to, gold transfers didn't, they shut down their entire economy over there. Truckers in Canada even weren't able to, their accounts got frozen in Canada because they were protesting different legislation there. Some of the legislation in regards to electric vehicles and every car or every truck needing to become electric. So, it's a pretty interesting thing to see truckers and, different other people kind of or their accounts being suspended. That's also taking place. You have a social credit score in China. So if you do something that they don't necessarily like, then you're considered untrustworthy to China's government. It's the first step in America becoming a fascist government, really and truly. And a lot of people are like, well, I don't care. I'm not doing anything illegal. Yeah, well, what happens whenever they make it illegal for you to purchase gold? Again, because this wouldn't be the first time that they made it illegal to purchase gold. Or what happens whenever they make it illegal for you to drive a gas vehicle and you have to have an electric vehicle. You go to a pump, you're trying to pump gas into your vehicle, and you can't put anything in your gas tank. Why? They didn't come for our gun rights just quite yet. But they don't have to anymore. They have rights pretty much to see where we're spending our money. So what happens whenever you go to, a gun show and you're trying to purchase a gun and you can't purchase a gun? They completely, that pretty much takes all of your rights away. Now you can't own a gun. They didn't lobby against, gun rights. They didn't care about that anymore. The next step that they wanted, or the next step that they overrided all of that. They just went straight for the money. So now whenever you go to purchase a gun, it makes it illegal for you to own a gun. Or they just simply freeze your account and tell you that you're not a trustworthy citizen, or, whatever the case may be. Or you go to donate to your favorite candidate, and you can no longer donate to your favorite candidate because your funds are no longer accepted. Like, they were declined. So, I don't think a lot of people are paying attention to the writing on the wall. And, that makes for a really scary world, where we no longer have rights. We can no longer say whatever it is that we want to say or do whatever it is that we want to do if it goes against our government or what the Democratic Party believes is safe, quote unquote, for the people. It's no longer about the people anymore. It's about control. And that's what they're after. They're after control. This is definitely the very first podcast. I'm very nervous. And don't really want to post this. But I have a deadline that I put a deadline for myself. And I'm supposed to post this every Monday. So I'm going to go ahead and post it. And I definitely hope to speak with you guys Monday. I'm going to talk a little bit about different ways to... I'm going to probably have social conversations about the social economics and different things like that on my page. Other conversations on my page will look like... I'll talk about different cryptos that I'm interested in investing and why I'm interested in investing in those certain cryptos. In different digital asset utilities. And so on and so forth. Everybody's hyped about Bitcoin and has, that's kind of like, if you're looking to make money, in theory, if you're a broke, poor person like myself, investing $1,000 in Bitcoin and it 20 times in your money, where you make $20,000 and somebody else made $1 million because they have it like that. You can't even purchase one coin at this point. Like, you have to mortgage your house just to purchase a Bitcoin. Come on. So I look for other coins and different things like that are relatively cheap. The majority of the coins that I look for are like $1 or $2. And you're like, well, doesn't that mean it's risky? Let's paint the picture real quick. It's not that Bitcoin, okay, to a degree, Bitcoin can be risky within itself too, right? A lot of people are saying, well, there's nothing backing it. That's one. Two, it's worth $20,000 now, but at some point it's worth $70,000. So, my theory, whenever I go to invest, I look for those cheap coins that I can actually afford. But that takes dedication, and it takes a lot of, because you're pretty much you don't want to, of course, bet everything on one coin or anything like that. But let's be smart. I don't want to put $1,000 in Bitcoin and it times 20 and I make $20,000. Okay, I might have a small percentage just so that I know for a fact that it's more than likely is going to go up because there's so many fans and so many users that support Bitcoin. But I'm also looking at these smaller coins, also called microcurrencies or digital assets, and different, anybody that's kind of making a pioneering first stage type attempt, simply because I can afford it. And that means I can have a lot more coins. And I don't know if that means anything to you, but it means a lot to me. Especially if I can have Bitcoin returns, where in 5 years, instead of seeing it times 20 or 10 years times 20, I see it like go up times 50 because it's like worth 50 cents and everybody can afford it. So, I'm going to leave you with these two top picks of my right now. Well, I'll leave you with three. Number one, everybody's hyped about it, of course, right? If you research on one end to the other, there are like 17 different investment strategists that are like they're all talking about it. That one coin is Cardano. Their ticker is ADA. Everybody's talking about Cardano. Okay, so you're like, why is everyone talking about Cardano? Like, how come I don't know about Cardano? Maybe you do know about Cardano. I mean, everybody knows about Cardano. Come on. And if you don't, you should probably look it up. So Cardano's like right now it's at like 40 cents, 40, 50 cents, somewhere around there. Which is not bad. So let's just say you put $100 in, or even if you want to put $1,000, come on. A lot of the different strategists like Ian King, Luke Lango, Nick Black. I'm trying to think of other people. I can't think of people's names. Those are just people that have kind of rolled off my tongue because I kind of know a little bit of like done some research on them per se. But there are a ton of people I'm talking about on Twitter, just everywhere, that are backing Cardano. So, it is something that's definitely revolutionary in the sense that it has a lot to offer. I think the Swiss bank just kind of partnered with them. So that's kind of a big deal, you know. So that again, that's something that I would definitely look at keeping, especially in your back pocket. And you know, I'm not an advisor. I'm not going to tell you, you know, to take it, snatch it, keep it, so on and so forth. But it's something to look at and to definitely have. Have some type of investment on, because they're looking at that's like a lot of these strategists, economic strategists, are saying that coin could reach 50 to 100x in like 18 months or so, somewhere around there, 3 to 5 years, definitely. So I mean, it's worth 50 cents. We're in the world's biggest crash, and in smart investor, most investors typically look for that bull run approach, right? Everything's going up. I don't want to miss out, so let me put some money in. And they may make some money, but if they would have put it in when everybody was scared to put money in, they would have made a lot more money. So I'm kind of looking at the markets crashing as an opportunity. And that's the way you have to, like, snatch your money. If you've got money inside of the market right now, personally, what I would do is snatch all your money out and then look for those prominent opportunities so that you're not losing $30, $40, $50,000, because that's ridiculous. Okay, if you've got it like that. But if you don't got it like that and you're just like in your 20s or so and you didn't have anybody like give you money or, you know, anything like that, and you're just broke like me, I would personally, like, instead of just taking this is my mindset, instead of just taking $6,000 a year, I think that's like the typical, people typically take like $6,000 and put it in an IRA, right? So if you take $6,000, okay, and I'm going to kind of branch off in a rabbit trail, so I'm sorry. But if you take $6,000 and you divvy it up, right? So the Jobs Act just passed. What the Jobs Act enables you to do, I'm kind of going into asset allocation now. The Jobs Act allows for you to invest money in startups, especially if you're broke and poor. If you have under $1 million in assets or make under $200,000 or $300,000 a year, then you are able to invest. If, like, let's just say you have zero in net worth and you make a little money, you can invest up to $20,000. Up to $2,000. It's like $2,200, I think. So, and then married, of course, that you're, separate. They're able to invest a certain portion, and then your kid. And of course, there are other ways that you can kind of do certain things still kind of invest money. Having a business, you can have your business invest money. You could, there's ways to kind of, still put more than $2,000 in, and make a good something. So, like, again, you can start multiple businesses and have multiple IEN numbers. I mean, come on. Think harder. And what's the saying? Sorry, I think I said think harder. Work smarter, not harder. So like I said, you can still kind of do what's best for you. Okay. But like I said, a lot of times, like, I know a lot of people that they'll gamble even, or go to the, play lottery, and they'll put $5,000 in the lottery, which I think is like ridiculous, because I mean, what's the chance of you actually winning that $200,000 that you're trying to win? Instead of trying to put $5,000 in a lottery, and you're hoping and praying on a finger that you make such and such amount of money, why don't you instead take that same money and put it in profitable businesses that will 5x? 5x means take the money, $5,000 times 5, $5,000 times 10, $5,000 times 20, 50, so on and so forth, 100. Why wouldn't you put your money in an investment like that that's going to actually bring, it's going to make you money? And a lot of investors aren't necessarily talking about that. They're not talking about different ways for you to make money. And a lot of people are like, oh, well, that's risky. What's risky is you taking $5,000 and going to a lottery, going to a gas station and buying lottery tickets, and you not making any money. You just pouring it out there. That's what's risky. You as the investor's risky. Not, the money's not risky. You are a risky person because you don't know what you don't have the know-how, or you don't know where to actually put your money, or you don't know about the actual investment, and you haven't done your research or pretty much due diligence, right? So due diligence is very, very, very crucial and very, very, very important whenever you're looking to make 10, 20x gains, right? So and I'm going to actually have a group called Young Ventures that's going to kind of allocate specifically towards, and you can like subscribe to that account that pretty much is specifically towards venture capital and like knowing how, which investments to kind of like, or what to look for in an investment, right? So, I don't mind educating. That's what I'm here for, right? So I don't mind educating about what to look for. But I also like show you my portfolio, research portfolio, and on those different, areas, and have that conversation with you about why I think it's super awesome and something that you should, look at least consider and look at. A lot of the research portfolios or due diligence packages typically cost like $8,000, $10,000. I ended up looking up one, and it was like $32,000 for one company. One company, $32,000. I'm sitting there like, oh my God. So like, again, young and broke. But that's okay, right? You learn, you live and you learn. And like, I mean, there's certain things that are like, they're the best type of investments to make if it's going to end up paying you in the long haul. So Young Ventures is going to be one of the different areas that you can subscribe to me for, and kind of get a little bit deeper information about, what we do there. But again, going back to that core, right? So you don't want to be a risky investor. You want to know what it is that you're looking at. And I know that a lot of people don't have $32,000 or even $10,000 to invest in each company before they know whether or not, oh yeah, I actually do like you. Yeah, I'm going to invest a little money here. So you can be risky, kind of on the riskier side, and say, I'm just going to allocate and kind of, not allocate, but diversify my portfolio and ignore, red flags, or not know the red flags, and just kind of like, I'm going to invest money here, 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 and then pray, something please happen, woo! And pray on the finger just like you would with the lottery, but that's more so gambling. I'm not in it to lose money, and I'm pretty sure you're not. So it's better to understand what to look for, and then in that in that program and in that subscription, I'll definitely talk about like some of the companies that I thought were a good pick and why I picked this company over picking such and such a company. So, and some of them, yes, I do have like due diligence packages and different things like that. Others, it's kind of like I've got some skin in the game, and I'm kind of like, looking at other, I'm kind of like looking at different companies. Like, I'm able to kind of tell a little bit better, but you still go back to that due diligence package, or you know how to do your own research so that you're not buying a due diligence package, So I don't mind explaining that and even showing you what to look for. It depends on, there's going to be like a cheaper basic one, which that one's going to require you guys to do more research, and then I'm going to have another one where it's like I'm going to give it to you, if that makes any sense. That way you're not you don't like if you have a busy schedule and you're just like, I don't want to be doing this all day. This is just like, I want my money to make money for me. And then probably later on we'll have a package where other people um in our community, like that are under my supervision or myself, will actually go in and create a portfolio for you for like a certain fee type thing. And we'll kind of like get into that, later for that young ventures portion. However, you know, it's very key to know what you're getting into and to know what you're buying. Whenever you look at a company, because you're buying into the company. Um, just like me, right? So you're listening to me, you're like, oh yeah, okay, but like you want to know, like I don't like my money, like I said, I don't like losing money, so I want my money to go into a company that's going to definitely 10x or 20x. I'm not looking to put my money inside of a company and then they go bankrupt and then I'm sitting there looking stupid, especially if like don't I would not put like go mortgage your house and get like 70 to $100,000 out and invest it in this one company. Like that's stupid. Don't don't no, that's risky. I mean, it might not be stupid if you know what you're doing, but at the same time, that's kind of risky because then you're leveraging money, and then you're playing a waiting game, you know. Oh, company, grow fast, grow fast, grow fast, you know. Um, so you don't want to put yourself in a risky situation, and you kind of want to use money that you already have laying around, that like your Starbucks money, for the year, or your IRA money, or the certain funds like that you want to allocate. Um, Now I do know people that have leveraged, but they have it at a certain level where they're able to kind of like they already have an income coming in, so they're able to pay on certain things and still make money during that period. So just be smart with that, because leverage is always smart. It's always great. If you listen to Robert Kowalski, he talks about um, buying debt, using other people's money to create assets. So that's always very smart. But you want to be very strategic whenever you allocate certain funds to certain areas and know what you're buying into. Um, so then and then also you don't have to pay capital gains on debt. So again, I think personally, like I go against what everybody else says. I think it's personally brilliant, but know what you're doing before you do that. So yeah. So again, so that's gonna be one area that you can subscribe to. Another area deals more with crypto, right? Um, and that's more along the lines of what kind of packages and different things like that I have, and the majority, in like talking about crypto and different things like that, and what's going on in the crypto world. So, those are my two main areas that I feel comfortable with. I don't really go into a lot of other things. I may talk about like a warrant here or there, which a warrant would be instead of buying a common stock. Common stock is like going to the mall and you see something that's really cute and it's full price and you purchase it full price. Or you go to the mall and you have a coupon with you. That's a warrant, is going to the mall with a coupon. And you cash in the coupon that the store gave you and sent to your mailbox. You're like, I got this coupon from you guys, and I also want that shirt. Here's my coupon, and you get a percentage off of that. That's the difference between a warrant and a common stock. Okay? So, personally, along with the market crashing, if you follow my drift, I personally would invest my money in warrants. Why? Because they're cheap assets and they're getting ready to make you a lot of money. If you want to reduce risk allocation, you can do it in two different ways. You can, or in multiple ways, you can diversify. You can invest in cheap assets, or you can, you might invest in Apple or Tesla, and it might be like $2,000. And let's just say your limit is let's just say you have like $1,000, and Tesla's one share is running for $2,000 with Tesla, and you have $1,000 to allocate. You can either take all your $1,000 and put it into Tesla. You can take it and say, I'm going to put $500 in Tesla, $200 in Apple, and $300 in Microsoft. Or you can find cheap assets that are like $1.20, some as low as 14 cents I've seen. This is, of course, I'm talking about the stock market, not cryptocurrencies at this point. But you can invest in those warrants that are like really cheap for no reason, and they have great potential. Yes, you can still lose all your money. And a lot of people are like, well, isn't that penny stocks? It can be. Some can be, but others are not. Like BlackRock has a warrant. BlackRock is not a penny stock, let me tell you. It's like $600 for one share. But a lot of people don't know about their warrant. And don't know that you can put $14 in a warrant with BlackRock and have, like, instead of putting $600, and take your $600 in that BlackRock and put it inside of their other division that's $14. And what, 600 times 14, or 600 goes into 14 how many times? So how many more shares could you have? And you know for a fact that it's going to go up because, hello, it's BlackRock. So those are the different types of things that you got to kind of think about, if that makes any sense, especially since on a bull run, BlackRock typically is like $1,000 per share. I mean, that's pretty good. So, again, you have to know your risk, and know yourself, and know the type of risk that you're willing to take. Another company right now that I'm thinking about is a company that Amazon's getting ready to either buy out, which means woo woo, money to be made, or make a contract with. Woo woo, again, money to be made. That's running probably about 70-80 cents right now. So think of a warrant for 70 or 80 cents. And they've already signed the paperwork with Amazon. And they're getting ready to 36x their money. 36x your money is what that means. On an annual basis. It's a kind of a big deal. And it's not on the news outlets. Why? Because it hasn't come out yet. So, those are the type of things that, like, I'm going to kind of like share and talk about. This one I'm going to give this freebie out on that stock side warrant. That company, Amazon company that I'm talking about, is Lion Electric. So you type in like LEV, and you either want to depends on what brokerage or what broker that you have. They have that ticker under different areas, most warrants typically are not accessible to the public. So it's actually easier than you think to find, because they're typically not accessible to the public. But LEV, if you're using like Fidelity or something like that, it might be like a slash and a WS. If you're using like Ally Bank or like any other company, they might have like hyphens or, what do you call those, apostrophes, two apostrophes there. It depends on, what brokerage you have. But if you can't find it, find the ticker symbol LEV hyphen WS or LEV with two hyphen marks. Call your broker and try to get in before September 31st, because that's kind of like the deadline overall before the information gets pushed out to everybody else. And try to get in that ticker. It's muy importante. Muy importante. Okay? Very important. Okay, for y'all that don't know Spanish. So, like I said, it's going for like 80 cents a share. Thank you, stock market, for crashing. Mwah. But it's a company that no one else really is talking about. And like I said, Amazon's already signed the contract for a 1.1 billion with a B contract that they're purchasing their electric 18 cargo wheeler, so on and so forth, with the company. The CEO just bought 50,000 shares. Let me rephrase that. Not just 50,000 shares, 50,000 warrant shares. Why? Because he's a CEO and he knows, like, I'm going to purchase it for this price so that I can, like, 36x times my money. Whenever you purchase a warrant like that, it also it allows for you to have some wiggle room. Instead of spending $3 per share, you're spending less than $1 per share, which allows you to, one, purchase more shares, and two, or, maybe you're like, I want this exact amount of shares. Let's just say it's like 100, right? So instead of spending $300 for 100 shares common stock, you have your coupon, you put in the warrant, and you spend maybe $100. Maybe $88 if it's still 80 cents. Thank you, stock market, for crashing. Woo! So, depending on however many shares you want, right? So, if you see this as a company that's going to, like, long haul and you want to be in a company like that, I would purchase the warrants. If you're looking to make just a quick buck, I'd go into the options account and get it for whatever the price is there, because then you can get 100 shares in one contract with them in that way. And you can kind of scroll down and make the expiration date till 2025 if you want to, you know what I mean? But if you're like, that's for someone that's just like, I don't want the shares. I don't want to have stock in a company like this. Personally, though, this is just my take on Lion Electric. I personally would want to have shares in the company. What's one main reason that I am supportive of Lion Electric? Not because I'm like, oh, fangirl over here. No, emotions, no. Let's look at what's on the table here. They don't require semiconductors, okay? Everybody else is kind of requiring semiconductors for, like, all of their bigwig stuff, because they have AI and autonomous vehicles driving. There's a semiconductor shortage going on right now. Lion Electric, they're just they've kept it simple, stupid, so to speak. They don't have all of the high tech blah 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 blah. But what they do have is what's actually important and what can be shipped out immediately. And that is something that does not require gas. Keep it simple, stupid, right? So while everybody else is going on a wild goose chase hunt looking for the next big semiconductor, they're saying, oh, well, you snooze, you lose. Sorry, guys. We're shipping out trucks today. We're making that bread today. So imagine how many other companies are going to partner with them. One is going to make it where their prices are going to be more affordable. Companies look for affordability. Okay? They look for what's going to be affordable. What can I get my hands on right now before I go bankrupt, spending money on gas. Any company that uses a lot of electricity, like gas, and not electricity, uses a lot of gas to like power their company, in the next couple of months could end up going bankrupt because they're pretty much what's going to end up happening is their overhead cost. They may break even, if that. So their overhead costs are going to get so high with gas that it's just not going to make any sense anymore. And that's going to create an even larger supply-demand shortage, which is horrific, okay? We already have a supply-demand shortage going on right now. Because we have a lot of people that they're either scared to work because of COVID. Oh, okay. Can't find jobs or won't find jobs. Okay? So, or it's too expensive for them to go to work because gas prices are through the roof. Now, like right now, what's pretty much going on is we're kind of draining our reserve because the election's coming up. And gas prices are not as high as, it's not like $4 or $5 a gallon, but it's like $3 a gallon. We've all seen it at $3 a gallon, but we also know that we've had gas at $1 with our previous president, and in that $2 range. So a lot of us are kind of like sad, mainly because inflation's kicking butt, and certain legislation just doesn't make sense and is causing a lot of pain. Okay? So if there's already a supply and demand shortage, just imagine the supply and demand shortage coming soon to your neighborhood, where people are not going to have the money to drive back and forth to work. So you're going to see a lot of people being laid off because they can't afford for people to drive their company vehicles. Then you're going to see like common people like me that have to drive their car to work and not a company vehicle. Yeah, like me. You're going to see a lot of people doing one of the following. They're either going to start living out of their car because gas is so expensive. They're going to quit their job and look for a job that's closer to their house, like less than a mile away. They're going to start biking, using using buses, whatever they can, so that they don't have to worry about their gas or their fuel in their car, because it's just going to be ridiculous. Like, they're not going to be able to afford it. especially if they're in a job that's being paid, like if they're being paid hourly and they don't have any room to kind of grow their income. So anybody that's looking, that's in that area, you find another income source and hurry up about it. Like, you're gonna need it. So yeah, so those are just a few things that you've got to look at. I'm going to wrap up in like the next 15 minutes. It may be an hour long, some might not be as long. I'm trying to fill out everything, if that makes any sense. So, but like, yeah, they're going to need it. I think Forbes said that gas could end up being a typical average gas bill in majority of America could be looking at a gas bill of $600 a month. So if your gas bill is already $600, just times that by 3 or times it by 5, and that's your gas bill that you could be looking at. And then tell me if you can afford it. So like, there's a lot of different things going on. There's a huge push for electric vehicles, and a lot of people are saying, well, that's you're technically taking away some of my freedom alone in that alone, because you're making it impossible for me to be able to own a gas vehicle, or do this or do that. There are a few things that I would personally do. If you have a newer vehicle that's like maybe a 2016, 2017, somewhere around that area, I would start. You can go and get yourself a new vehicle, but those vehicles are like $40,000, $50,000, $60,000, $70,000, $80,000, and that's another car payment. Technically, any car that's like $60,000, $70,000, $80,000, that technically was the average cost for a starter house back in 1980. So that's how much cars now are costing. So, personally, what I would do, if I were you, I would go to your local mechanic or your like dealership and see how much it would cost to change your engine in your vehicle to an electric vehicle car, a plug-in or a hybrid. Okay. That's going to save you a lot of money. And honestly, that's exactly what this family over here is more than likely going to do. Not insurance companies, car companies, what they're doing are they're purchasing the cars that you have, returning them or reselling them. Like, there's pretty much, they're not reselling them anymore, or they're going to stop reselling your gas vehicles shortly, because the company's actually going to get fined for selling gas vehicles. So what they're going to do is they're going to return it to the manufacturer and use the semiconductors that are already in your used vehicle and put it into the newer cars, so that you're able to technically purchase your vehicle. So like, instead of taking your car, sending it back to them for them to pretty much regurgitate back out your car electric and charge you maybe $40,000 for it, why not just go $40,000, $60,000, $80,000 or more for that vehicle? Why not just go to your local mechanic and say, hey, do you have like an electric vehicle, like electric whatever, can you like fix my car under the hood to make it electric? And it may be, like, I'm not gonna say it's not gonna be pricey, like, it's going to be pricey, but it could end up being like $8,000 or maybe $20,000. And some companies actually allow for financing. So especially like a lot of companies locally around me, pretty much if you have, or even like they'll give you like a credit card with them. So like if you for their service department. So if you go to them and you say, "Hey, can you like how much would it cost to fix under the hood?" It would you would probably end up um not losing as much money going in and having them fix your vehicle and make it into an electric car instead of buying a $50,000-$60,000 car. But I mean, every situation's different too. So like, you know, just weigh that and know that that is an option that you could use. And then try it out, you know, or at least get a quote on it. Because it could be saving you $20,000 in the long run, easy. Unless there are $20,000 electric vehicle cars out there that fit everybody, you know, in your family, depending on the size of your family. So yeah, that's definitely something that I would look at. Another thing that I would definitely look at doing, outside of putting a little money in that stock, because companies are going to want to think about this. Amazon right now, if you look at Amazon's Q2 quarterly annual report, I think they have like $36 billion left on their sheet, and it takes $260 billion for them to run and operate their company. They're running out of money. That's why they have a $1.1 billion contract with them. And they're based here in the United States. There are a lot of other companies that are having that exact same problem. And schools. Do you want your kid to go to school? Do you want to take them to school? You want them to walk to school? What's going to end up happening? All those gas, diesel vehicles are going to have to get replaced. Planes. All planes. If they're banning, if the United States ends up banning electric vehicles, that's not just cars that we're talking about here. You're talking about airplanes as well. Do you know that Rolls-Royce just made an electric airplane? 100% electric airplane. They have a few jets and a few other things like that. And they're getting ready to pump out a whole bunch to our military, United States military. If I were you, their preferred stock is like below a penny right now. I would kind of allocate a little money there too. And they're getting ready to create a subscription. Unfortunately, there are going to be some jobs that are going to end up getting cut. Anybody that like works on airplane engineer, all of those type of jobs. If you work at the airport, you're going to get your job. It's going to be bye-bye, birdie, for all the people that subscribe to Rolls-Royce. Because what Rolls-Royce is doing is creating a subscription to take care of the electric vehicles, which is going to essentially cut jobs at your local airport, or could very well cut jobs at a local airport near you. In the long run, because it saves them money, even more money, and airports want to save money. It's a business. All businesses want to save money because it creates a smaller overhead and allows for them to allocate those funds somewhere else, or give higher salaries to themselves. So those jobs will end up getting cut. If you're an airplane engineer, look for a job at Rolls-Royce then, because they're going to create a subscription type thing, which means your skills will be needed there. Especially if you know how to work on an electric, 100% electric aircraft. So that's something to think about. And then, of course, buy into their stock, because that means their stock on a yearly basis is going to be producing income from that subscription alone. So, yeah, Rolls Royce, Lion Electric, what did I say, Cardano for the crypto. Those are kind of three different picks that I would look at and look into. And I hope to see you next Monday. Bye, guys.